For investors, now may be the best time for sharpening your fangs, to go bargain hunting when the dust settles in financial sector. While the Credit Suisse calamity was averted by Swiss Central Bank with a rescue package of whopping 54 billion US dollars with a B. Who is Credit Suisse anyway? Credit Suisse Group is a global investment bank and financial services firm founded and headquartered in Zurich, Switzerland. Credit Suisse was founded in 1856 and has over 50,000 employees, has over 1.3 trillion US dollars with a T under asset management. This makes it the 17th Europe's largest bank by assets. Why is it being bailed out? In recent years, the bank has been experiencing deposits outflow, lack of confidence from its investors, fines and pending fines over misconduct in various jurisdictions, for example, in regards to grain sale and Mozambique corruption scandals and other issues.
Say that all press is positive. That isn't the case for Credit Suisse, which has had more than its share of bad headlines. In March 2019, it emerged that Credit Suisse had hired private investigators to spy on a former employee it suspected of taking its clients.
Our shareholders have been extremely robust. If you look at the share price, it's not the share price of a company in crisis.
The collapse of supply chain financing company Greensill Capital embroiled the bank. Swiss regulator FINMA said Credit Suisse had made, quote, partly false and overly positive statements when it marketed $10 billion of funds to clients as safe investments.
I'm actually confident that we will come out stronger.
Soon after came Archegos Capital Management. Its collapse brought Credit Suisse $5 billion of losses and saw executives fired. It also found itself the first Swiss bank to receive a criminal conviction tied to a cocaine smuggler. Efforts to reassure investors ran into problems.
The outflows basically have stopped. What we saw is 2-3 weeks in October, boom. And since then, flattening out, they have stopped. It's gradually coming back, in particular in Switzerland.
That saw FINMA open another investigation when the bank reported those outflows had continued. After the collapse of Silicon Valley Bank, investors are now eyeing others for signs of weakness. With Credit Suisse, they're not liking what they see.
After this Credit Suisse saga, many may feel that the worst is over. The truth is that we just don't know. All we know so far is that some banks are too big to fail. Central banks will be shoring up these banks in order to stay afloat. So, bank depositors don't need to panic. As a precautionary measure, or what bank customers need to do is to spread their reserves across a number of banks so as to not exceed protected amount by bank insurers like FDIC in USA, FSCS in the UK, CDIC in Canada, or FCS in Australia. I am sure in most other countries they must be equivalent. In the middle of this turmoil in banking, some investors may be asking if it's the time to invest in the financial sector. Not so fast. As long as we don't know which bank is next for the bank run, I mean in liquidity crisis, please note that this is not a financial advice. This is an observation opinion. At the moment, all investors can do is to keep the powder dry as long as possible. Cash is no longer trash, folks.